Hello guys, and welcome back to a new video. Today I'm going to talk about and I'm going to show you very powerful model, an entry pattern, okay? Not a model, but you can use it within your model, within your strategy, or you can build a strategy around it, right? So this one right here is again very powerful to determine the shift in order flow and to catch the reversal in the lower time frame, and by that I mean the continuation of the higher time frame, right? Lower time frame reversal, higher time frame continuation. So I'm not going to take a lot of time in this video. I'm going to show it straight to the point, and I'm going to show you examples after that. And in the next video I'm gonna do a backtesting session about it. On the 5-second time frame you can see how frequent it prints itself. Okay, so let me give you an example or a case study and you can understand how to use this entry pattern, and I'm pretty sure that you have seen it a lot of time. Maybe you didn't give it a thought of using it. So this is how it works. Let's say, for example, that we have this. Okay, this is a zone, an order block, doesn't matter. Okay, and let's put or outline it like this. So it has a 30%, it has a 50%, and then the 70% of that zone. These levels doesn't matter for this entry pattern, but this is how it goes. Price started trading to it. This is a simple pullback, right? Expansion pullback. Let's say, for example, we put in the first stop into here, price start trading to the downside, and then one more time trading to the upside, right? And sweeping that high, that previous high. And then let me add another parameter here. So we have the first stop like this. We are trading to the downside, and then one more time like this. This is the sweep of the first stop. Okay, so we swept this high with only wicks right here, and then we have this break of structure like this. First break here, and then maybe continuation to take this right here. Okay, now let me outline the sweep. So what this tells you is that this zone is really strong, right? It is rejecting price to the downside. Price failed to do it 2 times, and the price also stopped or swept liquidity from here, right? So this is the continuation sweep. It happens all the time. You know my model, taking trades from here, right? Then taking it to the downside. So this is what we have. Now, what if price does this? What if price close above, first of all, this high, and then it continue to take this zone? Now, do you think if we are bearish, you're gonna come back to take this zone or this high? Unlikely, especially after the break of this low right here. So there is unlikely, or there is I'm not gonna say not a chance, but there is a small chance of price going all the way to here and especially breaking this zone. So we have the break of this and also the break of this zone. Now this by itself is a powerful indication that we're gonna shift from bearish to bullish. And how I like to play this is to take my entries from here, my stop loss here, and then I take 1 to 1, 1 to 1.5, and 1R has a really high win rate. If you play it right, you're gonna have you can go to 75, sometimes all the way to 80% win rate. That's again if you are picky with your trades and aligned with the higher time frame. Okay, so this is not just an entry pattern that you're gonna look for on every time frame. But suppose that we pair this entry pattern with this price here. I need you to be creative with this. Okay, you can use it on a lot of instances or situations. But let's say, for example, we swept the low here, a higher time frame low, and we have this continuation model right here, this continuation pattern, and then it failed. Okay, so this is very powerful to indicate the break of structure and the reversal. And suppose that we are also inside a higher time frame zone. Okay, so price is bullish and then traded back to the downside as a pullback, and then this happens. So this can indicate the end of the pullback, right? This is one way. Another way to use it, you can also use this to a directional bias on the higher time frame. Although I don't do it like this. I use it only on the higher time frame or the lower time frame to take entries. So when you see this model right here, this continuation model to the downside, and you are expecting bullishness, you wait for this to get broken. So for me, a lot of times price will come back one more time to take the high, but fails to close above it. Right, fails to close above it. For me, this is still a bullish. This is still bearish order flow. First of all, this zone is still pushing price to the downside. This can be multiple mitigations to it, but breaking this zone is really high probable, and you will see it in the following examples. All right, so another instance is this, this is also, I use it a lot of times. Let me show you. Let's say, for example, that let's remove everything here. Let's start fresh. So let's say that we are bearish and we have this zone, and price tops it the first time, right? Start trading lower, breaking this like this here, and then the sweep of this high, the first stop here, and then what happens is that we break this zone. Now this, the difference between breaking this is not the same as this. Price can break this low, so you can see that we have the same thing happening here. We have this zone, right? And this zone have the first stop here, and then price swept the first stop here and then continue to the upside, but it only swept this, right? So this is only a sweep. Okay, and then what happens is that we broke this zone, the zone that was previously pushing price to the upside, that has the first top and the second top here. We broke it. This is really bearish, guys. The win rate of this is really insane, and you need to check it by yourself. But again, be aligned with the higher time frame. Okay, don't look for this, especially in a range. Okay, this is, for example, in a range we are ranging. You don't look at this at the middle of the range. Look for it here and here. Okay, now this model is not 100% mechanical. It is not. It requires discretion from your end. Okay, and you're not gonna get it right the first time. You need practice in it. That's why you need to backtest. Okay, you need to backtest, guys. So don't expect to get a high win rate at the first time, on the first backtesting session. Especially don't go to live with it, because a lot of times you will not see this. Sometimes this zone is printing with only candles. Okay, for example, this low is one candle, and then this low is the next candle, or maybe in the next or the third candle, and this is just a wick to wick situation, and we have this formation, but it is on the candles, so you really can't see it because you don't have a lot of experience with this formation. Okay, So this is a really beautiful entry model, okay, and I use it all the time. It is basically using our model, using the violation of our model, this continuation model, as a confirmation to take price lower. All right, so and don't expect deeper pullbacks after this. When price breaks this zone, you're gonna see speed after this, okay? So now I believe I've said a lot. Let me go to examples and we're gonna go from there. Alright, so the first example right here, okay, but let me be very clear. You're gonna have losers, and the more you practice and the more you are aligned and knowing where you are on the higher time frame, basically, I always emphasize on that, the higher the win rate you're gonna get. Okay, so practice. Now with the first example, you can see that we have this zone. So this is a really hard example. Okay, for I shouldn't use this as the first example, but you can see that this is one of the instances where I'm using only candles on this to see what's going on. You can see that we have this zone, this fractal from this low to this high. Inside that we have the first top into it with this candle, and then the second top into it with this candle, okay, and the sweep of it, and then continuing to the downside. After that, price broke this, both the high that calls a sweep, right, or the high that swept this high, the previous one, and also breaking this zone, right? So I take my entry once price returned back into that zone, the high of it. Alright, so that's the first example, and you can see that I'm using this with other things. For example, here I'm also referring back to the sweep of this. So we have this zone right here, from this high to this low. We have the first top into it, and then the second top here, the sweep, and then the violation of this. So all of these factors, and we are also in an expansion leg, all of these factors with the confirmation here. Okay, this is a better example. Here we have a break of structure, we return back, we have a couple of sweeps here, right? This lows here, you can see that we have only a wick. Now here, after price starts changing to the upside, I cannot confirm that we're gonna trade to the upside unless we break this zone. This zone, guys, you can see here. Let me outline it. It was pushing price multiple times. We have here a nice sweep. So first up, this is not the first time actually. Okay, so this is an internal structure, but you can see here that we have a sweep here, right? Return back, and then the breaking of that zone. Okay, and I take my entry after the break of that zone. Okay, that was pushing price multiple times, that was showing rejection. Sometimes you will see that there is a zone maybe here, right? So we have a sweep here, and then we have a small zone here, but it wasn't the one, or this is why I say that you need some degree of discretion from observing what's going on. You can see where is the zone that is pushing price to the downside. Okay, because sometimes price can break a zone and then come back to this bigger zone, and then it will push price to the downside. Let me give you another example. This is a good one. You can see that we have a sweep here, right? We are aligned with the higher time frame. We have a sweep here, and then you can see we have this zone. It was pushing price. We broke below it here, put in this top here, coming back, and then multiple rejection, and then once we broke it, it was the confirmation to go higher. All right, another one here. You can see that we have this zone. This is a higher time frame sweep, this line here. Okay, and return back to it here, start turning to upside one more time, sweeping this. You see multiple rejection from this zone, and once we broke it, it took us to the downside. As you can see, the first top, second top, the sweep, and the break of this zone. So if price is gonna push to the upside, this zone is, or we won't violate this zone. Okay, another one here. This is a higher time frame zone, this red zone, and we are also inside this zone. We can see that we have only one top into it, a lot of unmitigated areas inside it. We traded to the upside. You can see this zone, this green zone, is pushing price to the upside. It has the first top, the second top, and then what happens here? Price failing to take that high, but still we have this zone to worry about. Price can easily return back to it and then trade to the upside. Okay, but what happens next? We violated that zone here, and then we take price lower. So these are all the examples. I have a lot of examples, but I'm not going to show all of them here. The next video, I'm going to do a backtesting session about this, and you're going to understand where to use it and how to use it. All right, and the different variations of it. So I hope you liked this video. If you have any questions, DM me in my Twitter account or leave a comment down below, and I will answer you as soon as I can. Now, happy trading and good luck.